Hello, large cap stock selection for swing trading, uptrend line strategy for beginners. So to select large cap stocks for your watch list, we have a watch list here. I'm going to use an example of Thinkorswim. So an example of Schwab. So if you have Schwab account, you log into your account, you like in the top bar section, you click on research. So when you click on research or you hover over it, you'll see the drop down menu and you'll click on research tool. So when you click on research tools, it will take you to the next page where you'll find the stock screener and other things. So you'll click on stock screener, and when that opens, you'll have multiple criteria to choose from, and I like to use basic. So when you click on basic, it will open up basic section for you, and underneath basics, I like to click on market capitalization and exchange. Exchange is just like the market where the stock is selling. So under market capitalization, you have the macro, the small, the mid, and the large. So, and here we just have an example to share with you. Depending on your selection, the number of stocks available that you have within the capitalization market or market capitalization. So, assuming all of them are selected, you'll have about 7,000 of them. And then we will select New York Stock Exchange and NASDAQ just to be on the safe side. You are trying to put your hard work money to work for you. So to be on the safe side, more conservative side, we are going to limit our market, the stocks we are going to purchase. We like to limit it to the one that are selling on New York Stock Exchange or NASDAQ. So by narrowing down the pool from 4 to 2 market to choose from, you will decrease your availability by 2,000. So we have 5,000 available with that. So if you just start out and you wanted to limit your price range, like how much the stock is selling per share, you can do that in the price section as well. So here I try to show you the different options that you'll have. The first one, the previous one was assuming all of them are captured, are selected in 2 markets, and you have 5,000. So the next one is showing that, okay, so if you just want to select large cap, which this video is about, automatically from that 5,000, you have 381 out of them of large cap stocks that are sold on New York Stock Exchange and NASDAQ, combination of both. So now, assuming that you have all the prices, all the stock market selected, and you have 2 markets, and you have the price criteria displayed as well for the stocks selling on publicly. Within this price range, you have 12,000 of them. So, but then because we are narrowing down our selections, and this is the narrowest one among them all, so it's pulling 5,000 out of them as well, assuming you are selecting all the market capitalization. And I just try to find those to go through it to show you all those different options. So if you just want to buy stocks that are selling within $10 per share, you have 2,000 of them, regardless of the market capitalization. If you are buying from New York Stock Exchange and NASDAQ. So if you took macro cap out and you want the small, the mid, and the large, you have about the seven of them that are selling within $10. If you took small cap out and you just want a selection of mid cap and large cap, and you want to buy stocks that are selling less than up to $10 per share, you have about 25 of them. Again, selling on those two markets. And again, because of this video, if you want large cap stocks that are selling on New York Stock Exchange and NASDAQ and cost less than $10, you have two stocks there. So from that point, well, two stocks is not enough to create a watch list that will trade from for the whole year. So therefore, what about, from a few cents to $20 per share? You have 15 of them, large cap. So clearly you can see that large cap cost more, sell their stocks for more per share. So if you say, okay, you can save about $40 a month and you can use that to buy one share of a stock, large cap stocks that sell on either one of those two markets and cost within $40, you have 41 of them. And we know that you can create a watch list of about 70 stocks or so that you can analyze on a daily basis within an hour if you are analyzing it very quickly. So, and you have 41 of those stocks within 40. So if you can save about $60 a month and you can buy a share of a stock, how many stocks sell within $60 per share? And that large cap, you have 66 of them. And if we do not factor in the price and large cap and selling on either New York Stock Exchange or NASDAQ, we have 338 of them. So with this list, if you are okay with this list, pulling this list out, and later, the one that are too expensive, you can take them out, you can do that. I don't usually use the price as a criteria, for the sense that the price can vary. We have Thinkorswim platform here, and you can see that if the stock is on the support line, the value line, the entry point, compared to if it's at the resistance, it's going to be 200. This one alone is about 200 different per share. So therefore, I don't really like to use the price as a factor to select those stocks, because I know that you will buy it at the lowest price compared to where you will sell it. Therefore, it's all about having the watch list. At the time you are creating your watch list, a stock might be at the resistance line or at the peak of the mountain. You are not going to buy it there, but it does not mean it's going to remain there. At some point, it's going to come down to the value line to start going up again, and that's where you will buy it. So having it on your watch list, if it met all your other criteria, will allow you to be able to see it, since you'll be analyzing the chart often, to see it when it set, it pull back and start making higher lows for you to buy. Therefore, I don't use the price as a criteria for my selection. But again, it does not mean that all the stocks within the price range you'll buy. But even when you start, as you are a new swing trader, it's okay not to buy stocks that cost you, a lot of money per share, like $1,000 per share, for instance. Those, you don't need to start from there, especially if you do not have that much in your account. And even if you have that much in your account, you don't want to spend that to buy just one stock. So you might want to, find other stocks that you have on your watch list that you will be able to spend that $1,000 to buy multiple stocks, buy one share of multiple stocks, so that you can test your strategy with those stocks to see which one are well comparable with the strategy you are using, and go from there, and that will allow you to trade often as well when you are not buying expensive stocks that use a large portion of your investment amount. So from here, you will click on, let's go back, you will click on view matches. When you do that, it's going to open it for you, and you'll be able to see you have Apple in here, and because we select the price, it's going to show us the price as well there. And you have the choice to print it, you have the choice to export it as a CSV. As a CSV, you will be able to copy and paste in a spreadsheet, and from there you'll be able to start doing your filtration again to remove some of them. Does not mean all of those large cap, does not mean automatically they are uptrending or they are stocks you want to trade. For instance, you will filter international companies out, like they will be ending with AG or SA. You will filter out L.L.Cs. You don't want L.L.Cs, L.Ps, LPs, PLC, and things like that. So you just want to keep corporations or organizations. So those will end, the company's name will end with corporations, INC, CO, Corp, or org. And in rare instances, you may not even have the entity title at the end of the name. But if you don't, unless you know the company to know that that's a corporation, you can leave those out as well. But most of them are going to, have the entity type at the end, and and the one that you do not recognize, like an American entity type, just take them out, including all the limited liabilities ones. So that will narrow down your pool again. But that is how first you select those large caps. So, and you'll be able to have those a long list of them. After you took the L.L.Cs out, you'll be able to have a long list of them, and you'll refilter with the stock, the markets they are selling on. And now you can filter again, or you can try to figure out when they went public. You'll be able to see that when you use Schwab, when you click on the chart, you'll be able to see the maximum. You'll click on the maximum chart, and you'll be able to see the beginning year at the left side of the chart, because the chart will have the dates on the x-axis and the price on the y-axis. So the far back that the chart will show you, you will be able to see the dates there. And Schwab does provide that information more than Thinkorswim. Thinkorswim does not give you that option, that information clear enough. You might find it somewhere else, about the stock somewhere else, but not using the chart. But I tend to use the chart on Schwab, either by looking at the dates at the beginning of the chart on the x-axis, or when I select maximum chart, it will show me the dates in writing as well, and I will just put the date down. So it's a manual work. It takes a lot of time to do it, but I think it's good to do that. That way you have a library of stocks, a specific type of market capitalization. If you do it by capitalization type, by market capitalization type, you'll have your own library. And now you can analyze those charts using Thinkorswim platform. If you have Schwab account, is free. You can analyze the chart, and you can just read the chart by upward or growth and dip. Anything worse than that, you can take it out as well, like level downward. And to do that, you'll go to maximum monthly chart, And we are going to use the example of today. We have 3 stocks that we are going to analyze. And the first one, and today is September 30th, 2025, and we are going to analyze the stocks after the market closed on September 29, yesterday, and before the market opens today. So the first one we are going to analyze is WM. So WM made it to our watch list for 2025. So therefore, we are going to use maximum monthly chart. And those are the 2 that I tend to use. Maximum monthly chart to see if the stock is upward stocks, and maximum daily chart to analyze the stocks on a daily basis or whenever I can, to buy stocks and to sell stocks. So we are going to go to maximum monthly chart, and we are going to look at these stocks here. And as you can see from the beginning, that the chart can show us the price equivalent to that point is like what, $16 when I first did it, $17, and right now it's selling at $219. And yesterday the price went down, so the price is in red and the battery is in red. That means at the end of the day the price was lower than the morning when the markets opened. The price dropped yesterday, but by looking at it, it is uptrending. The beginning chart price was lower than today price, so that is one thing. Second, you look at the wave of the chart to see if there is too much wave or how the wave is. And I tend to see if it's continue going up. Like if it's like a big wave, then I'll rate it growth and dip. If it's small wave, I'll put it upward. But I'm looking for having higher highs over the years, and so I can see that. But yeah, I will use that to rate it, and the upward, some of the growth and dip, depending on how the growth and dip is, will make it to my shorter list until, and then as you rate the year, you put the year that they went public as well, you'll be able to choose, okay, so like how young you want the company, you are okay with the company since it went public, like how long ago it went public. I like to have at least one recession since the company went public. At least one recession happened to make sure that the company survived that recession, to see how that impacted the wave. So for instance, 2008 is my cutoff point. Anything after 2008, I might allow it, depending on what kind of stock it is. Otherwise, is the cutoff point. And for swing trading, because you're not going to hold it in your portfolio for long, you can be more lenient with that and do 2000 if that's what you want to do. If there is a company that you really want to trade, like Google for instance, but it has not been around for whatever year your cutoff date is, you can make those exceptions on a one-on-one basis, by actually knowing what kind of stocks you are accepting. Because I don't try to know those stocks that are on my watch list, therefore I just have those criteria that I go with. But there are some specific companies that I might give exception to if they made it so far to that point. I say, okay, they are young, but I can accept it. Visa could be one of them. I think Visa didn't make it that 2008 benchmark, so I allow it. And I think Google might be somewhere around there too. But yeah, and those are the things you factor in. So, and when you are looking at 2008, will be somewhere here, you can see, you know, how it impacted the company. No, 2008 won't be there, right? I have no idea. Is it 2020 here? Maybe 2008 will be somewhere here. If they can actually write that year properly, but I think they are trying to write it on the line as well, the dotted line, but you get the point. So, and yeah, I try to take those years into consideration, but that is just me trying to be more conservative. And from that point, you will narrow down your list from your master list to maybe a shorter version, and from that shorter version you can narrow it down again to another shorter version, and so forth. And once you are satisfied with your list, by the time you have your watch list, you want a watch list of about 70 or so that you think you can analyze within an hour. And I found 70 to be about that. 79 I have here. So, and that is how, one, we are going to select the large cap stocks, and we are going to narrow them down to the upward one. And from that point, you will trace your trend lines. So we are going to trace our trend lines and trying to go, passing by the lows and going to the price. And on our way, we'll continue doing that until we get to where the price is right now as well. And this one, if I activate it, and by doing that, I tend to connect the first two lows. That's why I'm moving this, because I wanted to connect this one and this one. So you're connecting the obvious lows, and this one went down a little bit. So from that, I connected to this one and that one here, and that's the closest that I got to the price. I could continue, but I'm trying to trace support lines. So from here, we will go to maximum daily chart to do our analysis and to move the lines better if it's not touching the lows the way we want it. But now from here, you can see your lines, your base lines. They are your entry point. Now you want to select the one that will be your entry point. They are the valleys. Some of them could be the upside wall of the mountain, but they are where you want to buy the stock. So you want to select where you want to buy the stocks, and by doing so, you wanted to see which lines that the stocks is touching base with often when it's done climbing the mountain, and those are the ones you wanted to select as your entry point. So we have this one, and I just trace it, this one, and I'm going to put it as a purple as well by going under 80 and change that color. That way they are different from the default line. This is supporting the mountain. So now that you have your valley lines passing, you see the mountain, the valley line is the valley route, or the route at the valley of the mountain is at the bottom. So the price is going to go up, climbing the mountain, and come down to it and go again. So you want to buy it at the valley, get into the race at the valley, and ride it with the price all the way to the peak. And when it's down with the peak, start going down, or when you think you claim enough, you can get out of the wagon. So, and that is the idea. You just cannot time it exactly right, but you just want to have some parameter in place. So you have your support line, which are going to be your entry point. So you want to compare your price of today after the market closed, or yesterday after the market closed, to where you want to buy if you have not bought it yet. And in this one, for instance, we we don't have in our portfolio. We bought it at a higher up somewhere here in December and sold a little bit higher as well in March. So the arrows at the bottom shows where we bought, and the arrows at the top shows where we sold, like at the top facing down. So, and we traded few times in 2024 using short upturn and swing trading strategy, but in 2025 we want to use long upturn and swing trading strategy, and that consists of buying at the value line when the price pull back to it and start going up. When it pulls back to it, it's going to be making lower lows, and the lows are the red bars delimited by the green bar. So you want it to be comparing the red bar. This one is lower than that little one there, which is lower than that one, which is lower than that one. So you want it to be comparing the cluster of the last of the cluster of the red bar that are delimited by the green bars to each other, if that makes sense. So for instance, this red bar is lower than that one, which is lower than that one, which is lower than that one. That's the way I compare it. So there is a downtrend here, but then here there is an uptrend there, in the sense that this bar is higher than that one, which is higher than that one, but this one is lower than this one. So you have an uptrend somewhere here, type of things. So you want to compare the price, and right now where the price is, it reached a new high. Large cap tend to reach a new high often. So it reached a new high, and when around May, we are in September now, so I will say maybe it's down going down, it's down going up, and maybe it's on its way going down. But yesterday the price went up. That's why we have a green bar. So that means the price at the end of the day was higher than the price in the morning when the markets opened. So, but still, even though we have an uptrend there, a short uptrend there, it seems that this is going down. Whether it's resting somewhere there to go back up again, we don't know. The thing is far from where we want to buy. Therefore, there is nothing we are going to do to it. It is not a buy today for WM. The next one we are going to analyze using the same principle is WMT, which is Walmart. And WMT, if you can look at it on the monthly chart, you can see it's uptrending. And then we'll go to, and then we have our lines here. This is what we want to buy, but it's so sharp, we don't know if it's going to come back down here. So we are going to keep observing it. We traded quite a bit in 2024, but I just have a feeling like it is, maybe at the least, this could be a point that we might buy at as well. But I just feel like it's so higher up that I just don't think this is going to be a valid line for it. I think it's like a line to support the upside wall of the mountain. So let's go to maximum daily chart to see it closer. So that is the line that we just selected. We just highlighted, but you see how it went through that area? So we can activate it and move it down a little bit so that it's touching that low, but it's not too much across it if we can help it. It started somewhere down there, and that when there is not too long of a line, this is a longer. So you want your value line to be a long support line crossing multiple years. Those are the dotted lines. So this one is long, more than a year, but I want it longer than that. So there is a chance it can come down. The good news is not too far from this. So if it comes down to this one and start going up from there, we could buy some share. But yesterday the price went up, and again it reached a new high not long ago. It could well be on its way going up again. It's been making new highs. It touched base with this and went from there. So, but I still don't think this is going to be a valid line. We don't know, it could well be, but I just feel like 1 year it started at the beginning of 2024. So I think it's a little bit of a short trend line for me to use it as a valid line for my long uptrend line swing trading strategy. Therefore, I will keep choosing those two. And at this point, the price is far away from where we want to buy. It is a no buy today. And the next one we are going to analyze is WSO. It is highlighted on our spreadsheet because we purchased it and we have not sold it yet. And chances are it's negative in our portfolio. So again, as you see those arrows, we traded quite a bit in 2024 using short uptrend and swing trading strategy, buying it around this trend line and even shorter trend lines. And those, those small swings, those are why we traded. And then we bought it again right at the tip and it was done. But guess what? Now it's working on the downside of the mountain going down and is well close to the value line where we want to buy. And we can go to maximum monthly chart to see the further version of it. This is the line we selected to buy out. And that is the only line we trace it, because this line that we started here, let's see, connecting is somewhere, connecting this low and that low is going down there. And I just feel like this could be a good one. But right now we can have this there as well. There is a chance that once it touches base with it, it can start going up from there. So this could be a valid line. But who knows if it decided to come all the way down here. It's just too far. Multiple years that it didn't touch base with this line. So I think this could be more a possible line to be the valley of the mountain. So from there, we are just going to look at it. Right now, it's close to the line. So we'll be paying close attention to it. But it's not there yet because it's making lower lows. Even though yesterday the price went down, there is a small upward there. This yesterday low was higher than this one, which was higher than this one, which was higher than this one. So you could trace it, that uptrend line there. But if you do not want to buy it too early and get trapped in it, as you are looking at it there, the line you want to buy at, you can go back to see in the past when it touched base with that line. Did they just leave, start climbing the mountain from there, or it lingered there longer? You can see that it touched base with it, went up, came back to touch base with it, went up, touch base with it before start going up. And we even bought it 2023 there and sold it there. That time we were using 52 weeks low and 52 weeks high strategy, and we are aiming more for dividend as well. But that is so because it touched base 3 times before start leaving, we can assume if it's going to repeat the pattern, it might do the same here. So there is no point of rushing and seeing 3 higher lows or 4 and just buy. If today is a green bar and just buy, we might just well stay longer at the valley, waiting for the price to be ready to start climbing the mountain, the new mountain. Therefore, we are not going to buy. We might just keep observing it. Who knows? It might turn around, go back down, tend to get closer to the line, or go below it and go up. We just don't know, but we can just keep observing it. It might just decide to start going up from there. If we catch it higher up compared to a little bit further away from the line, is fine too. You are not going to buy exactly at the line unless you are very familiar with the stocks and you are okay if it pull back down. You know that it won't go too far down. You will get trapped in it, but you will stay in it for a while. that is okay. It is a choice you have to make. For instance, we have been trading this stock since 2023, so, and quite a bit in 2024. So therefore we could afford to take that risk with it. We bought it at a higher price and we have not sold it yet. So even if we purchase it at a in the price here, it's still going to be lower than what we pay for it here. And I don't like to sell the stock at a loss as much as possible. So that's why we still have it. We know that at some point it's going to go up, and the price is going to be higher or past where we bought it before we sell it. But that is the strategy we use to determine when to enter the markets. And once you have it, you will start comparing what the price is to when you want to sell it. And when we want to sell it, it's going to be the next high. And when that next high is reached, we are going to use some other analogy. Are we going to sell it because right now, or stay longer in the trade? Right now, when it reach a new high, after leaving here, when it reach a new high, it continue to make new highs all the way, pull back to, you know, the wall that is supporting the upside wall of the mountain, the upside of the mountain, but still making higher highs for a while, more than a year before start going down. So we could well stay in 6 months longer after it reached a new high. Or we can use a price analogy by quantifying the exit point, comparing the last touch. We can start with the first touch base, which was the first touch base. The last, it does not really matter. We can start with the last one touch base. We can say 246 and 571. So 246, 571 divided by 246, that's 2.3. So you will double your money if you stay that long in the trade. So by taking 2.3, after you purchase the stock, the lowest point you reach before it start going up, you can take that into consideration. Let's say the lowest point that is going to get is 377, then 377 times 2.3, then you can say that, well, when you reach 870, 867, you will sell it. So that is another way of passing the exit point. And once it surpasses the previous high, the new high, at that point, if you click on A and put exit target point, A67, per share, and have it there. But with this one, because we bought it higher up like that, when it reach the value line and start going up from there, we might buy some more. Because that is the value line we want to buy it with the long option or swing strategy we are using, but it's going to be well past the first purchase before we sell it. And we might use the price point as a strategy to sell it, in combination of the distance between the first new high to the last one from the previous cycle as a guideline as well, so that we do not stay too long in the trade, just in case it didn't reach that price limit before it start going down. We do not overstay in the trade. But we have those two exit strategies that we can rely on to guide us, so that we do not leave the trade too early and we do not overstay either. So thank you so much for your time. We thank you very much for watching our videos. We thank you very much for all of your comments, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting, L.L.C. YouTube channel and ninasoup.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, one share at a time, so that you can stretch your money, practice your strategy by trading often, and from that point, once you know the stocks by a process of elimination, changing every year, taking stocks that didn't really work well with your strategy, take them out, replace them by new ones from your master list. You'll end up having a list of stocks that work well with your strategy, and from that point, to increase your profits, you just increase the number of shares you are buying. But start small first. And WSO is not a buy today either, based on my opinion, and we can take a look at it in our record. For this year, we bought it in November, almost a year ago, and that is the sold session. We have not sold it yet, but the purchase session, we bought 3 shares for the price we pay for it, and it has been in our portfolio ever since, because clearly we have not sold it yet. The amount is still committed, and when we sold it, we'll be able to record the sale information as well. But that is, how you pretty much analyze the stocks and do your trading. And just keep in mind that some stocks will bankrupt on you, and that is an example of this one here. They didn't really bankrupt on us. They sold our stocks for the price you were selling at that point, and I don't know, it was a mandatory thing for them to do, but at least they didn't bankrupt. When a stock bankrupt on you, you lose all your money in it. But they sell it, and from how much we purchased it to how much they sold it, it was sold. We made this loss in it. That's something to keep in mind. That's why you need to be careful. Stocks you are swing trading, and this one we bought it for dividend income purposes in 2023. So before we start swing trading, and those just help us sharpen more the criteria we use to filter our watch list for the stocks that we are going to trade. And when you spend too much time creating your watch list to analyze stocks for trading, you just go to your watch list. You don't need to keep searching online. There are stocks out there for you to buy today. You have it right there on your list, on your spreadsheet. Thank you so much for your time. Just start small. For more of swing trading related videos, will you please check the playlist of those videos in the description section of this video. Thank you.